I'm Charlotte McLeod with the Investing News Network, and here today with me is Derek MacPherson and Jacob Willoughby, mining analysts at Red Cloud. Thanks so much for being here today.
Thank you for having us.
Yes, so we're here at PDAC and we're here to discuss your recent report. It's an endangered species list, so it's companies that could get acquired in 2020. Before we jump into it, I just want to ask if you could explain what criteria did you use to add the companies to the list?
Sure, we came up with actually 8 different criteria in the report, and we outlined each of them. So just to list them off, obviously jurisdiction is important, grade and margin, critical mass, recent investments or overtures, commodity scarcity, deposit scarcity, management history, and the particular shareholder base. Most of those are fairly self-explanatory, but I think the ones that could use a little bit of explanation is sort of deposit scarcity. There are certain kinds of deposit that are just really, really rare and particularly coveted for various reasons. So that's a factor that maybe not the average investor would have contemplated, but we included it in ours.
Okay, so the list that you came up with consists of mostly big companies. We don't have to run through all of them, but it's companies that people would probably have heard of. Tell me why you think we'll see that action among larger companies.
Well, I think, in particular in the larger cap space, the big companies are the ones that are most in need of new projects and new assets to fill their pipelines. And so they tend to have to transact at a higher level to get something that makes a difference for them. And so then it will, we think it will be at that higher level where the transaction, the M&A picks up initially, for sure.
Okay, so the smaller companies, mid-tiers, you would expect to see less of it.
Less so this year, but I think we'll see that will be the follow-on trend, right? You'll get the larger companies will transact, the big prizes will be taken out of the market, and then all of a sudden these smaller companies that are left will be the next set that people go after.
It's certainly been a pattern in previous cycles.
Okay, so we can look back and say this happened before,
right.
This is why we think it will happen again.
Right.
Okay, so each individual company on your list has its own takeover thesis that you've created. I wonder though if you noticed any similarities between the acquiring companies. Is there something you can point to that unites them in some way?
Not really. They're all one-off kind of situations, various different commodities, mostly gold, but also some copper and platinum, palladium. And a lot of them are of a certain size where there's not too many people who could be the acquirer. Right. Some of them have had recent investments by certain groups, so that tends to suggest that they could be there for the later purchase of the company. So there isn't really a general consensus or correlation between the potential acquirers.
They're really quite specific.
Yeah. Well, I think though on the flip side of that, for each of the companies, there is a clear theme as to why it's going to get taken out, right? And whether it's a unique depositor or it's of a scale that matters to a certain type of acquirer, or it's in a jurisdiction that is likely to see a lot of transactions. So
maybe you could share an example just so people know a little bit what we're talking about.
Sure. As an example, one of our picks in the takeout is RNC Minerals. RNC is an Australian gold producer, but it's listed here in Canada uniquely. Australian gold producers trade a steep premium to Canadian gold producers right now. And so while RNC is in Australia, its operations in Australia, it doesn't have that same multiple advantage. And so it's very easy for an Australian company to go and pick that off because it's trading at such a discount.
Perfect. So we were talking about differences between the acquiring companies. I did notice that the takeover targets, they're not all gold. They're in multiple different commodities, and we've been hearing, I think, predominantly about gold M&A activity over the last year and a half. So is this more of a broad mining sector theme as you see it?
Well, I mean, mining in general has been underinvested in, both by the majors and especially by the juniors. And so there aren't a lot of projects to fill the pipeline, so these transactions have to happen. I mean, mining it's a depleting asset, it's a depleting asset base. All the majors have declining resource profiles no matter how far out you look. And so they have to refill those pipelines, and so the M&A is going to happen across the board. And I think in our particular case, we didn't want to be just gold focused, there are assets and transactions that are going to happen outside the gold space. So we wanted to highlight some of those as well.
A good example of that would be in the platinum palladium space, where we saw North American Palladium get acquired.
Right.
So we have other picks in that space that we think that could also be acquired. In the sort of specialty kind of stuff in lithium and uranium, other companies there for various specific reasons that we think stick out a lot more than their peers.
Right. And so, as you're saying, it kind of goes back a little bit to one thing that people talk about a lot, which is majors not investing enough in discovery. So
Right.
you're seeing this as they need to go and get.
Well, yeah, the years of low, just to steal a quote from somebody else, low metal prices are the cause of high metal prices. So what happens is as metal prices start to rally and companies start to generate cash flow, they'll realize that the cupboard's bare when they go to build the next project, or they look at their pipeline out 5 or 6 years, and so they have to have to acquire to refill the cupboard, if you will.
Okay, so you've assembled a lot of information for people. We haven't even really scratched the surface, but for investors who are looking at this, what do they do in this situation? How do they use this information to the best of their ability?
We'd always recommend investors do their own due diligence based on
as everybody should.
As based on the situation. But I think, M&A is typically not a reason to own a stock outright. But if you like that stock or you like that theme, this is another box to check, is a reason to invest in it.
Okay. Now, maybe the most important question in the environment we're in today. This report was done in January, I believe. Does everything in it, or most of it at least, still stand given the interesting circumstances that we're seeing in the markets today?
Yeah, for the most part, things have not changed in our thesis for any of these companies. The one exception being Wallbridge, which, quite opposite to our call, acquired or announced an acquisition yesterday to acquire Balmoral. So anybody who was looking perhaps at acquiring Wallbridge is now very likely going to wait until that transaction is voted on by the shareholders of Balmoral, which happens on May 7th. But I would argue that acquisition makes Wallbridge an even more attractive target for a number of reasons. So for the short term, that's really the only one that's drastically changed.
Yeah.
But yeah, the rest of them are steady as they were.
And I think pulling back out to a higher level, the interesting time that we're in now.
Right.
I mean, obviously, I don't think that fundamentally changes. It doesn't fundamentally change the necessity of companies these larger companies have to refill their pipeline and acquire projects. It may put a bit of a hiccup over the next month or so while we sort of work through the interesting time that we're in, but I don't think it fundamentally changes the need for M&A to happen and for these companies to acquire things.
Okay, so that's everything for me, but is there anything else either of you would pull out of the report that you really want people to know about?
I think it's important to know. I mean, we tried to be a little bit exhaustive in how we approached it and what we did, but I think it's important to realize that we're obviously not perfect, and there's lots of good information in there, and but you should and have a good read of it, because there is good information as to why we think these companies were taken out, and they are unique themes. They're not they're specific. It's not we think all gold assets are going to be acquired or all copper assets are going to be acquired. Each company has its specific theme that makes a lot of sense for it and the reason why it's going to be acquired.
Perfect. Well, thank you so much for being here. That was great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Derek MacPherson and Jacob Willoughby of Red Cloud.